Welcome to the 40 Finance channel, everybody. My name's Jeff Beers, and in this video, I'm doing my March edition of stock dart throws. We got 5 stocks here under $25. And the real point here is to just expand our knowledge base of the stock market and try to look for potential winners that, at least for me, when I'm doing research, I like to learn about and understand so that when they come up on the news or you see them in a headline, you kind of have some background, you know where they sit, and you know that there might be potential there. So these are 5 stocks I picked out that have a pretty good case for growth. They're certainly not risk-free, but there is definitely an existing bull case for them, and that's why they're featured here. So let's jump right in. First on the list today is a company called Cleveland-Cliffs, CLF. It is actually one of the oldest companies on the stock market that I found out. And with Cleveland-Cliffs, you're basically betting on a resurgence of United States Steel. And I'm not talking about United States Steel, the company, US Steel, although that's included too. I'm talking about the entire demographic of United States Steel. Cleveland-Cliffs is a supplier of the iron ore pellets that the steel mills use to actually make steel. When the steel business is good, Cleveland-Cliffs is doing very well at the exact same time. So the play here is right now steel is in a bear territory. There's a lot of good values in steel that I've seen. However, no one's quite sure where the price is going to go. If you get in at Cleveland-Cliffs at a stock price under $10, it has a phenomenal current PE ratio of 266, forward PE of 7, and it also has a dividend of 1.94%. So pretty intriguing play if you're doing some research and you figure out, hey, I think that construction and real estate and all these things are going to come back online here in 2019 or 2020. Cleveland-Cliffs might be an inexpensive way to play off that hunch. Taking a look at the tip ranks best performing analysts in regards to Cleveland-Cliffs, and you got about a 46% upside, which is pretty easy to do at a stock price under 10. You got a high of 17, the average of 14.58, and a low on the board of 13. So that's out of 3 analysts who cover this stock. So pretty promising potential over the next 12 months. Might be a fun dividend stock to pick up and watch, particularly if you're feeling good about United States construction and therefore the steel industry as well. All right, next up is a stock I've talked about before that I actually got hammered on myself because I bought it too early, but Camping World Holdings, okay? So current price is $14. I bought this stock somewhere in the neighborhood of $20 back in fall before the stock market collapsed. So I got blasted with it, but it's starting to come back and show some signs of life, and they're still on the acquisition front. They're working hard to become the mega stores for camping and RV sales. So it's a pretty ambitious project, but it is going well from an acquisition standpoint. The only catch right now is with the economy not growing as fast, and there's plenty of bears out there in the economy, right? Do you believe that consumer confidence will continue to remain high enough for investment in campers, RVs, all those things? I believe that that segment is growing more popular. In fact, it is, as people look for alternative family adventures. The catch is, will they like it enough, and are they confident enough in the economy to go out and boost some of these camper sales that right now Camping World is not seen as strong as they've seen in the past. However, they also deal in used campers. So there's sort of a flip side to this. Even if consumer confidence isn't that strong, they do get some commission off used campers across the nation, so that might be a play as well. They are coming from a place where they've spent a lot on acquisition. You see the current PE ratio is 50, but as those acquisitions bring revenue online, their price to earnings ratio is going down rapidly fast. So take a look if you're interested in this particular niche. And looking at the tip ranks top analysts, you got a median target price of $19.33. That's a 37% upside target over the next 12 months. Remains to be seen. I think the big X factor here is consumer confidence, and will people continue to squirrel away money in savings like they are doing right now in this time of uncertainty, or will they go about and make that purchase? Remains to be seen. I'm betting that the world comes out of their shells as springtime and the weather takes hold and Camping World has a good year. Next on the list is a local favorite here in Cincinnati, Ohio, and that is the Kroger Company. I'm not sure it's really easy to get excited about grocery stores, but living in Cincinnati, I've seen a lot of the changes that Kroger is making because they do test stores here. Obviously, their corporate headquarters is here. And me being in digital marketing, I've seen their IT development center go online, seen a lot of the jobs that they've been posting for. And they are definitely at least trying to take grocery store shopping to the next level. Okay, so we already have local delivery here. We have the pickup service, which my wife uses all the time, 3 or 4 times a month, as a matter of fact. And I've been on their website as far as grocery shopping online and then picking up the products from the store. It's a pretty good setup. So I think they're doing a lot of good things. The catch here, of course, is Amazon. And that's what the play really is here with Kroger. And I put it on the board here. It's an anti-Amazon play, which right off the bat is going to scare some people because nobody messes with Amazon. Don't forget that Amazon, while it has big intentions to disrupt groceries with the purchase of Whole Foods and that, we have not seen this come into play yet, okay? This is not a living, breathing thing, and Kroger is investing quite a bit of money into their IT and online shopping experience. So to the tune that it actually dropped the stock. You see here how it was living around the $29 range or so. When it came out for the Q4 earnings and they announced some of their spending that they have targeted for 2019, a lot of investors went down on the stock because they thought, well, this is a huge bet that they're putting, whether it's $1 billion or whatnot, I can't remember. But it tanked the stock right out of the bat because folks were like, whoa, you were doing good. You were kind of swimming along, and now all of a sudden you're going to drop this huge investment to keep going on these IT upgrades. I, for one, think that it's a shrewd move that could very well pay off. I'm a little bit older, but I really can't imagine not using my Kroger store in some shape or form for grocery store shopping. So, the world's changing, and I'm sure there's some counter beliefs to that, but I like what Kroger's doing. I like their existing market, particularly here in Cincinnati, and how they've been using shopping carts and stuff for at least a decade. They have data on people, and they've got a shot to make this thing work. It just depends on whether or not you believe it can happen. It is a dividend stock, a healthy dividend stock at a 2.28% dividend. I don't know if the price itself is going to explode into Mars, but it is a dividend play that can pay off every quarter for the ongoing future. As far as tip ranks is concerned, you see the analyst target price of $27. It's about an 11% upside for the next 12 months. But this isn't really a gross stock. So it's good to see that they have a 10% upside plus the dividend, and you're just going to have to grow a little bit slower with a stock like this. But on the same token, you should find more stability in a stock like this as opposed to like a new startup or something that's just going up and down and is not profitable and all those things. So definitely take a look at Kroger if you think that there is another angle to the Amazon takeover. All right, next stock on the board is Upwork. So Upwork is coming in at $20.52. They are not profitable yet, so there's no forward or backwards or trailing PE. However, I really think that this is an intriguing play. It's basically a cloud marketplace for employers to find work, particularly in the professional level and up. So whether it's coders, marketers, designers, those kinds of things. Upwork is basically a marketplace where large corporations or even medium and small-sized businesses can find experts to work in their projects, and that basically allows them to get access to a much higher level caliber employee, not only because it's cloud-based, but also because it levels the playing field with everybody coming in. So anyone who's looking for, let's say, an app developer, you're going to see the same names that any other company would. It just depends on what level of expertise they want and can afford. The big play here is the concept of a cloud workforce and the current gig economy. That takes folks who have awesome skills, who don't want to commit to a 9-to-5 life in a cubicle, which I don't blame them, and allows them to connect to paying jobs and vice versa. So in theory, it's good. There's been freelance marketplaces before. There's been forums before where you could hire some of these IT jobs, but no one's really taken it to the level of Upwork quite yet. And so I think they've got a great head start on a world that's probably only going to grow. Nobody is going to wake up tomorrow coming out of college and say, gee whiz, I really want to work a 9-to-5 job in the cubicle. It's going to be more things like this. And so I think that there's a lot of potential here. Looking at the tip ranks targets, we have about $25.75 for Upwork. That is currently a 25% upside. So you have high ranging from 30 all the way down to a low of 19. So generally speaking, most folks are bullish on Upwork as a company. I guess the biggest downside here for standard value investors is it's not profitable yet. Some of the fundamentals of the company weren't bad when I was taking a look at debt and some other things. So it's not a total plane crash if it loses a couple bucks on earnings here or there. I think that this is a company that can last for the future. All right, next up on my list is ANGI Homeservices, coming in at $16.35. ANGI, similar to Upwork, is kind of taking an old school philosophy and making it new. So ANGI Homeservices connects you to contractors, right? So it sort of eliminates looking on Craigslist for a plumber or going by some other rating system that you don't even trust. ANGI has conglomerated all those things into one platform, and it's actually free for the users. The costs come in from the contractors. So if ANGI is successful in continuing to build this up as a trusted site to find quality contractors in your area, then you're looking at a place where contractors could use their digital marketing spend and feel pretty good about finding contacts who are ready to buy today. And that's a big problem, just as big of a problem as it is for homeowners to find quality service people. Service people struggle just as much to find quality clients. So I think this is a really valuable solution. The only catch is just how big can it grow? How can they be top of mind for everyone who's a homeowner when it's time to do some work in the house? And that's going to take a little bit of work. It's going to take some marketing. It's going to take some referrals. But the concept is very strong. P/E ratio right now of 109 is obviously high, but you know, they're profitable, so that's good. And the forward PE though for this year drops down to half. It goes down to $52, so very promising. And if you're looking at ANGI, I think the thing that you want to imagine in your mind is how does the home remodeling market look this year, right? And I think personally it looks pretty good. If we're talking about new home buying, that market is a little soft right now. You see a lot of problems with home builders and concerns about new home starts. So it leads me to think that home remodeling, if people decide to reinvest in their existing homes, then these services like these are going to go up dramatically. But I will say, guys, Americans have money. They're saving money right now. Take a look on the news about savings index and things like that. There is opportunity in homes. It's just which side of the tracks is it going to land? Is it going to be remodeling? Is it going to be new home purchasing? Is it going to be the home builders? It's hard to really say, but we're hitting that season right now here in spring where one of those tracks is going to take off. Looking at the tip ranks target for ANGI Homeservices, they got it right at $20. There's only one of the top ranked analysts who's following ANGI right now. It's just not that big of a stock, but he has it down as a a 22% upside for the next 12 months. So again, this is going to be a play. You're not going to get rich on ANGI today. This is where you're playing again 2-3 years, which is what I'm always doing. And do you see something here that can revolutionize home contractors, remodelers, etc.? I think there's something to it. I need to dig in more to be sure, but keep it on your list of things to watch if you're interested. So there we go, 5 stocks under $25 that are worth the time to look at. Hope you guys enjoyed this. Please subscribe to the channel, like and share the video if you did. I'll see you on the next video.